Good day, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Monday. It's February 14th. It is the last day of the second week of February. There, I got it right. And remember, February is a short month, so we're about halfway done right now. It only has 28 days, and today is the 14th. So let's get into our market analysis. This is going to be a very, 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 very interesting week. And it may be the week that decides whether the bulls or the bear controls Wall Street. Watch what I'm going to be talking about, and you'll see what I mean. We're really tethering on the edge of that blade. We can go one way or the other. Now, markets are opening up fairly stable, nothing really beyond random, but the fact is better than being down 400 points. But at least everything is on the same board, but anything below 75, 85 on the Dow, it really is just noise. So the markets are just kind of not here, not there right now, waiting for the opening to see what's going on. There's not enough news right now to cause a major catalyst. Speaking of news, we've got a lot of things this week. And every week, aside from the fact that Ukraine, the major factor this week, the major cloud moving over us this week is Ukraine, obviously. But we've got a lot of information this week. We've got Producers Price Index. We've got the Red Book, which is a private retail sales, chain store sales report. We've got FOMC, retail sales, housing permits, jobless claims, manufacturing index, existing home sales. So a few things we're going to get a good grasp on this week. Producers Price Index, retail sales, and FOMC, where the Fed is going, and housing starts. Housing starts have been coming down a little bit because interest rates are going higher. So we'll have a good understanding of where the housing market's going. The new housing and existing housing, we'll have a good idea of what the manufacturing index is looking like and whether it's becoming more impactful and whether prices are going higher or lower. We'll get a good idea on FOMC on when and what Fed intends to do. Don't hold your breath on that one. Industrial production, import and export. The big report for the week is going to be industrial production, in my opinion, and the Philadelphia Manufacturing Index. Housing, I don't think is going to impact the bond market nearly as much as the industrial production and PPI, so keep your eye on these reports. And my favorite report of the week is going to be retail sales. Retail sales makes up 2/3 of the economy. So it may be very important, especially in light of the fact that we have minutes. So this week, Tuesday, Wednesday, and Thursday are going to be big week for Fed data. Keep your eye on FOMC. Now, bond market. The bond market looks like it's bottomed. And with flight to quality happening because of Ukraine, I wouldn't be surprised if investors kept putting a little bit more money into the bond market. So don't be surprised if this swing low held for a while. It also looks like we bottomed out here. And anytime we go to the RSI, we usually rise at least for 2-3 days. So I'm looking for the bond market to be bullish this week. All right. Now, in terms of the news, we've got a lot of stuff on the table. Let me see if I can give you a good analysis. I wanted to highlight everything so you kind of get a good understanding. And I don't just read this. I go through this back and forth. Wall Street futures follow global markets lower. Not right now. They're actually a little higher right now. As the fears of Russian invading Ukraine mounted, I don't think it's going to happen. Wall Street index lost 1.9% on Friday after the White House told Americans to leave Ukraine within 48 hours. Other governments, including Russia, pulled diplomats and their citizens out of the country. Russia is one of the biggest oil producers, and military action that disrupts the supply chain could cause energy markets to go higher. Investors were already on edge before that, as the Fed intends to raise rates. Hey, folks, the Ukraine debacle may be a good reason for the Fed to say, hey, we're going to back off a little bit. They're looking for any reason because stimulus, they've been pushing so much stimulus into the market that we have inflation at a 4-decade high. And Europe and US, they don't want that to continue because it's really messing up. It's putting prices at a 40-year high. Investors move money into treasury bonds, which is what I was saying, gold and other safe havens. This is usually very typical and common when there's fear of war happening. Treasury prices have been falling on expectations that the Fed will raise interest rates as many as 7 times this year. Folks, don't hold your breath. If Fed succeeds in cooling inflation, that would increase the buying power of the payout from the bonds, making them more attractive to investors. In other words, interest rates would go higher. That's what this is saying in a very complex way for absolutely no reason. So Looking at the NASDAQ 100 momentum levels, as you can see here, we're back to the lows on a 3-year, on a weekly basis, and I don't think we're going to stay here very long. Maybe we'll cool off a little bit more. Maybe we'll have a shakeout, which is why I'm very, very cautious right now about the market. But we went already down really, really low, and it doesn't look like we're going to go much, much lower. Again, we're not really up here. We're more down here. So I think the worst of it by far is behind us. Also, looking at put to call ratio, we're already above 1 again. And you know what that means? Anything above 1 means the market is going to get ready to move higher. So I think we're going to see a decent shakeout this week. Looking at each individual ETF, which I'll do right now. Let me do that real quick. Let's look at the major ETFs. If you look at them on a weekly basis or on a cumulative basis, you've got energy, consumer staples, financial, utilities, materials, all the defensive stocks, and all the speculative stocks right here. Consumer discretionary, communication, technology is a little bit higher, which is surprising, but that's chips. Chips because there's a shortage of chips. On a cumulative monthly basis, looks very, very similar to what we're looking at right now. Technology is a little lower, but defensive stocks are still at the bottom. Energy, consumer staples, they've been on top. Now, let's look at it visually. Energy's looking good. I don't think energy is going to go down this week too much, especially in light of the Ukraine debacle. Consumer staples, I think, are going to kind of just hover around here and see if the speculative stock sectors pick up or not. Financials are looking pretty good. Again, more volatility, not really much directional bias. Healthcare is taking a little dump, but I wouldn't be too worried about that. Technology is taking a massive dump, and I'm hoping it's not going to go down to test the lows. That may be the last swing, so I want to be really careful today. Industrial stocks are looking like they're getting ready to go up, actually. Basic materials looks like it's in an uptrend. Utilities looks like it's bottomed out. Consumer discretionary is the sector we're going to be watching carefully today, and real estate. This looks like it's bottomed, communication, but the sectors you want to pay close attention to is real estate. I think it's going to bottom out and start coming back up. Consumer discretionary, which I also think are going to come down a little bit and then start coming up, and technology. So I'm not really all that bearish on the market. I think the worst may be behind us, especially because the momentum levels, even though they're making lower highs, we're above 1. Anytime we're above 1, the market is overdone or getting overdone. And right now, it really looks overdone. Let me give you some levels on the Dow. This is really important. First, we'll start with the SPY. Let's see here. Now, again, we broke the 200-day moving average, so I think we may have to go a little bit lower until we shake out, and then we're going to go higher. So I think we're almost near the lows. But again, if we can't break this 200-day moving average, which is near the 440, 450 level, it's not going to look good. Looking at the Dow, again, we need to bottom out. Looking at the Dow, again, we're below the 200-day moving average. I'd like to see us trade above the 200-day moving average, which is at the 350 level. But I think we're going to maybe shake out, maybe have another bearish day. The weeks usually start out weak and have a sell-off, and then we start seeing buying coming in. So we've got to be really, 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 really careful right now. Like really, really, really careful right now. But keep your eye on those levels. On the Dow, it's the 350, 40, 351 level. On the NASDAQ, let me give you the NASDAQ 200-day level. We got a while to go there. 367 level. And on the Dow Jones, oh, we already did the Dow. That's the, I keep going back and forth. That's the 351 level. And on the SPY, and you can add a 0 if you're trading the index. On the SPY, that's the 445 level. So I gave you all the major indices. Pay attention for bottoming. We may see a bottoming, just not seeing too much more downside. Again, the NASDAQ 100, we're near the bottom. We only have 20% of stocks trading above the 50-day moving average right now, which is really, really, really low. So I think the market is going to start coming back up. Maybe not now, but maybe towards the end of this week, beginning of next week. There's just not that much of a shakeout, and most of what's known is priced in. And remember, aside from interest rates, we're also pricing in, we're in our value, this the fact that Ukraine and Russia may be having a lot of trouble, and that may not develop. So if that doesn't develop, we're going to see a relief rally from stocks, and I think that's going to be the case. Also, keep an eye on bonds. We may see more upside on the bond market because I think they are grossly, grossly overdone. Now, pay attention to what I'm going to tell you. I'm going to tell you something really, really big. When news or earnings hit, there's generally a large move in stock prices, right? You guys know that. Even when earnings are positive, any minor negative news associated with it can trigger a short-term panic sell, causing a temporary imbalance between the bulls and the bears. So while most traders' accounts get wrecked during this imbalance period, Marquet Latimer, she has this 120 rebound setup. Man, you got to hear about this setup. It gives us the chance to get on these tanked stocks at a massive discount. That's right. It gives us a chance to get in on these tanked stocks at a massive discount and ride them back to the top in less than 120 hours or less. 120 hours or less, a major discrepancy happens in price. Marquet has a 120, it's called the 120 setup, rebound setup, and in 120 hours, the price comes back to where it was. I love this. I love reversion to the means and fill the gap type of trades. They are amazing. And you guys know how much I love pullbacks, right? What do you think the rebound setup means? Pullbacks, right? So pullbacks, gaps, and Marquet's on fire. She and I have not done a webinar before. We're going to do it for the first time. You want to click the link below and register for a live event. It's happening tomorrow, 1 p.m. Eastern time. You do not want to miss this out, okay? And remember, follow the link below. And if you're watching on YouTube, go to the Wealth Press YouTube channel and follow the link below. It's there, below this video. And tomorrow, we're going to talk about strongest stocks, strongest sector, weakest stocks. Follow the link below. Do not miss out Marquet Latimer's 120 rebound setup. You guys are going to love it. She's going to give you all the rules. I'll be there. It'll be a great time for all. And right now with the market going crazy, this is the most opportune time for this type of trading action. Swing trading is hot right now. I'll talk to you guys soon. Follow the link below this video and send me some feedback. Support at marketgeeks.com. Bye, guys.